in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We're starting a new week, hopefully a quieter week as well, one with a midweek holiday. Yes. I checked, it's Thursday, right?
Yeah.
All right, we're just starting the week. I'm Prashant. With me is Surabhi and Nigel. And of course, we're coming to you live from the CNBC-TV18 Motilal Oswal studios. Guys, had a restful weekend. Surabhi had a musical weekend, right?
I think after all the music that we heard from central banks, from the finance minister and whatnot, I thought, okay, let's just kind of end it with a song.
Nigel tells me otherwise.
Yeah, no. Surabhi is the biggest rager among us. But it was a good weekend, nice, pleasant.
And no news, no one blowing up, no catastrophe striking the world, right?
Weather wasn't too bad as well.
Yeah, weather was good.
Nights were good, actually.
Yeah.
So I had a great...
Nigel was out.
I had a great
smile
weekend.
says a lot. Later, post the show.
I had a good weekend.
All right. But I think, Surabhi, what you said, I think, is the headline, which is that there is no news. There is no news. And no news is good news. Last 2 weekends, we've basically had 2 crises and 2 bailouts. I mean, if you remember, the SVB saga played out over that Friday, Saturday, Sunday. We came back the Monday before last with news that the government has stepped in to protect depositors. The last weekend was the Credit Suisse UBS weekend. So, in a way, it's been busy the last 2 weekends. And the week after that has also been extremely busy with huge amount of volatility. Although, I mean, end to end, Friday to Friday, the change has not been so much. So this morning we start with nothing. No weekend crisis, no weekend bailout, and I think markets will take it. US, by the way, the last I checked, the S&P E-mini contract was up about 0.4. It's a gentle kind of slightly higher start, which is good. US on Friday was up 1%, but Europe has had no such luck. Now, European markets, and the changes will come up. The Euro Stoxx 50, which is the sort of index of the top largest 50 stocks in Europe, that was down almost 2%. Deutsche Bank was down 8.5%, and the largest banks index was down almost 5% or so. There was no news flow per se with regards to Deutsche Bank, but CDS, the credit default swaps went up, shares sank. Just generalized kind of fears. Who's next? And I perhaps suspect that there may have been some weekend hedges, etc., taken as well. Given the experience of the last 2 weeks, what if we come back on Monday morning with a completely different kind of situation with regards to Deutsche Bank? That's not played out, and I think that's good news. Markets are generally unsure about whether they need to worry about European banks. By the way, we had commentary from the Eurozone regulators on Friday saying that European banks are in much better shape. There is nothing to worry, etc. But in times like these, affirmations by the regulators don't amount to too much. So we'll see. In the US, it's looking better. The US 2-year yield is down 130 basis points in the last 2 weeks. It's down from 5.08% to 3.79%, which is good news, which is great news. But the question is, are markets once again, and this is, I think, the third or the fourth time, underpricing the level of policy rates this year? Markets go, and this is, of course, on the back of the banking issues, and we had the Fed meeting last week, etc. So are markets suddenly underpricing where rates in the US will be? Some believe so, some believe yes. Markets have done this and then priced back the hikes very quickly. So we'll watch for this. But generally speaking, on the banking crisis side, things in the US seem to be looking a little more settled. Here in India, of course, we had that mini budget on Friday with all these tax changes, and that did sour sentiment a little bit. We talked about this. It's not so much about the impact, but largely the fact that so much was done, which was not thought about, or at least did not find place on the 1st of Feb, but 6 or 8 weeks later, you got so many other changes which one has to deal with. The Nifty is very close to once again retesting the sort of 16,850, 16,800 kind of levels. We had 2 solid tests of these levels, which were successful. The market bounced off very sharply. Will we be a third time lucky is the question. And I think a lot of it will depend on, the global situation, etc. as well. I mean, if you have relentless pressure from global markets, it becomes difficult to hold on to these levels. If not, I mean, given the extent of underperformance in India relative to other markets, we're oversold relatively speaking to some of the other markets. On the way up, Nifty will find resistance at the recent swing high of 17,207. On the bank Nifty, I mean, it hit the 20-day moving average on Thursday, not on Friday. And then from exactly there, it sold off. Low of 38,613 is the big one, which Bank Nifty needs to hold. And on the way up, I mean, averages, daily averages come into play. The 20-day, for example, on the Bank Nifty, which is the near-term one, is at about 40,126. As I've been saying for the last so many days now, let the market tell you what it wants to do. Don't preempt. And if you want to trade, I mean, at least give yourself 1 hour to just see the kind of price action. It's a new week after all, and then kind of take positions one way or the other. The SGX is indicative of a 0.5% higher start, 17,011. Surabhi.
Prashant, yeah, and this is interesting. It's not bad at all, considering some of the markets in Asia are actually down. We're looking at declines of about 0.5%. Hong Kong, by the way, is down 1.5%. So given that, this seems to be a pretty decent level for the SGX to track. Let's see how this goes and how much of that optimism we can retain as we get into our opening. Just a point on some of these banking issues, just recapping, it's been a week of hectic central bank activity. So we had ECB, we had Fed. We also had the Bank of England raising rates by 25 basis points, and the Swiss National Bank itself raised by 50 basis points. And this even as data continues to be red hot. Inflation numbers out of UK have been pretty significant. And we had the flash PMI number out of the US for the month of March. So I just want to recap that and put it on the table as well. That reading was 49.3. versus 47.3 month on month. The estimates were 47, but what we got was 49.3. So therefore, the data continues to be very hot. Central banks are tightening, and that leads us to the simple critical question that as this tightness continues, will we see any more asset liability mismatches? At least for the time being, that's what caused SVB and that crisis. And more importantly, as we get into sort of the more macroeconomic impact of these higher rates, will there be some credit issues as well at some point in time? And that's something that markets are grappling with. And therefore, perhaps the confusion that keeps leading to the sharp sell-off in bank stocks, the way we saw in Europe with Deutsche Bank on Friday. Just want to sort of remind viewers as well that what led the market to turn around. Remember, Europe closed quite low. Wall Street turned around because we had a statement coming in from none other than the German Chancellor himself, saying that don't worry, everything is fine. This is a very, very profitable bank, which it is. I think 9 consecutive quarters of profit. Their CET1 ratios are at a very comfortable positioning. Their net income for 2022 was substantially higher. This is Deutsche Bank financials, obviously. So anyway, that kind of got the markets back from the edge, so to speak. Just a word on fund flows. While all of this confusion continues and we have no clarity on which way global markets really want to head right now, the numbers for Friday, these are, of course, provisional numbers that came through. The negative from FIIs was more than offset by domestic institutional buying. And for the month of March, as of now, a lot of these huge block trades that we are getting on a daily basis, they've kept the monthly net inflow number still positive for March versus a negative number for January and February. We're up by about 7,200 odd crores in the month of March. This is the final data from the depositories. So that's the silver lining. The range, of course, Prashant has mentioned. And Nigel, I guess for the Nifty, it's a little more tentative because we are, still closer to this zone of 16,825 to about 850. Bank Nifty is still a little distance away from the lows that it hit in the chaos, last week. But I guess the best case scenario probably would be maybe a range trade, at least hold the range and not break it from the downside.
Well, Prashant mentioned that we have a truncated week, right? That would mean that expiry will be 1 day earlier. Yeah. Because expiry would have been on Thursday. It will be actually on Wednesday this time around. So the next few days will be quite volatile. And as you said, the bulls will want to hold on to those lower levels at 16,850 odd. Now, if you pull up the SGX Nifty and the Nifty futures, the SGX Nifty suggesting we're going to see a big gap up. It should be to the tune of around 50 points, just going by that, because you compare the SGX Nifty with the Nifty futures, so it's not 180, 100 points odd. It's more like 40 to around 50 points odd. But the Nifty is prone to selling at higher levels, as we've been seeing on a day-to-day basis. Now, it's crucial for the bulls to protect the recent low. The Nifty bank, though, getting back to around that 200 DMA, that's what will give some bit of hope, and that holds the key as well. The problem is in the broader markets. Even in Friday's trading session, everyone's focusing on the Nifty ending at the low point of the day. The small cap index took a harder knock. The mid cap index was down. The small cap index was down even more. So the breadth of the market needs to improve because portfolios are getting absolutely hammered. That's the mid cap index. Pull up the small cap index as well. That was down close to 1.7% odd. So pain in the broader markets. What do the FIs do? Well, after a while, we saw them adding more longs than shorts, mildly so though. 7,000 long contracts. And that's why the short positioning from around 92%, it's come down to around 87% odd. On the index option side, well, they're writing calls, and they're writing calls very, very aggressively. Close to around 3 calls were written for every 1 put. So let's pull up a couple of strikes. 17,000 calls, 17,100 call. Between them, they added close to around 80 lakh shares odd. Getting into expiry week, there was aggressive writing being seen out there. But for the bulls, what's giving you some hope is there was some put writing as well at around the 16,800 and around 16,900 put, which brings us to the levels, the crucial zone, 16,800 to 16,850. Well, that needs to hold out. On the upside, going by the options data, the 17,100 to 17,150, the bears are positioning it in such a way that we don't get past that 17,150 odd mark. The Nifty bank needs to get to around the 200 EMA to give the bulls some hope, and the 200 EMA comes up for you on the screen. My guess is that, in fact, today, the Nifty opens higher, but that is likely to get sold into. So don't chase the opening. If you want to get in, buy the intraday dip and keep your stop loss at around that 16,800 to 16,850 odd.
All right, Nigel, thanks very much for that. Now, levels to watch, the action from the futures and options perspective as well. Well, let's get this going. Before we start, though, let me quickly tell you what's lined up in the first 30 minutes of the show today. We will get you updates from markets across the globe. Matt Orton of